As we close very close to the market lows, we get today's market action right now and reaction. James Lowell, Advisor Investments Chief Investment Officer, says fear in the, look at him, he's smiling because he's all ready for this. It's a buying opportunity, all this fear for investors. We have Larry Shover in the pits of the CME. All right, Larry's also smiling, but for probably different reasons. Listen, you guys love the action as much as anybody, but there was quite some action as the president began to speak, and you see we closed pretty much at the lows of the session.
Yeah,
no
you're right.
Go ahead, Larry.
Anxiety is rising here. I mean, as the debt drama continues to rise, it's just sucking up all the oxygen for the market and for the traders. I mean, up until today, traders were at a standstill. I mean, some were waiting for a rebound, like a resolution rally. Some didn't want to stand in the way of some type of crisis sell-off. But when you consider the S&Ps have fallen almost 4% since September, you have the VIX up 60% from August. All these things, the bias is starting to tilt a little bit. We're listing the port. People are starting to get a little bit more concerned, and we can see it today with implied volatilities.
All right, Jim, let's talk about this word default, okay? Because the definition is being stretched a little by this administration. The president, the Treasury Secretary say as soon as you hit the debt limit, a default they suggest is almost necessary. You're going to be defaulting in some way. Whereas before, a default was a very specific word. It meant if you don't pay those people who have bought your bonds, that's a default. They're stretching that definition. And when the president specifically was asked if you had to prioritize your payments, if we hit the debt ceiling, would you first pay off the bondholders first, which is essentially international law? The president would not answer that directly. He deferred to his Treasury Secretary. Does that concern you?
It does not concern me. This is Washington at its worst, which I guess we've just come to expect as Washington trying to be at its best. The reality is that default is still a long way down the road, even though it feels like it's weeks away, and those weeks the clock is ticking. There's just no question in my mind, at least as of yet, that we're not going to be able to figure out some sort of solution that helps us manage, at least in part or in whole, both the debt ceiling and the default question.
But in essence, you're saying maybe wait till that high fear moment where the market drops a bit more, and then what? Jump in and buy what, Jim?
Well, I mean, Liz, look, I get the fact that this market is as nervous as a seal in a shark tank. I don't think anybody doesn't understand that. But the reality is that's when you want to begin to look for opportunities. We're still in the aquarium. There aren't cracks in the glass. There's no water leaking out of the tanks. As investors, this is a good time to be looking. I would put it another way. No one has ever made themselves rich by selling on fear. And as fear continues to be the catalyst, we'll continue to look at fundamentals, both in economic reports that we can get our hands on, as well as earnings, to help us deliver what we hope are reasoned approaches to reasonable long-term gains.
Well, now, Jim, you specialize in exchange-traded funds. You don't do individual stock picking as much as you do the funds. I think most retail investors agree with you. They're gun-shy of getting into picking individual stocks. But what's interesting to me is that despite these talks about the default, what it is, whether or not, in fact, the bondholders might get screwed the way GM bondholders were screwed years ago, you have two financial funds. You have one that focuses on consumer finance and one that is financial sector portfolio. Explain what they are and why they appeal to different sectors of the finance community.
So, David, my premise there is that consensus is almost ruling out the consumer and their desire to spend. But I think you buy what enables the consumer to buy. That's consumer finance, Visa, MasterCard,
Okay, hold on
American
one second, Jim. I'll let you finish that in a moment, but we've just gotten Alcoa earnings. This is the aluminum company of America, very much a proxy for global spending on things like aluminum needed to grow. They have met the EPS number at 5 cents excluding items. They have beaten on the revenue. This is unusual. Alcoa has struggled recently over the past several quarters, and what's happening? The stock is responding in kind. It is jumping about 2% at the moment. If you just excuse me, I put on my glasses. A couple of things that you needed to see with Alcoa. How is their flat rolled business doing? What are they seeing when it comes to actual pricing? And the pricing in aluminum has been very challenging. Aluminum has dropped in price, and therefore Alcoa has had a difficult time actually being able to charge more. But they now say they have 16%, or about 651,000 metric tons in smelting capacity offline. So they cleaned up the business. They narrowed their opportunities to be spending too much money, and in turn, they have beat estimates on
Liz, another very important thing just hitting the wires right now is that during the third quarter, the settlement discussions with the Department of Justice, of course, the Department of Justice has been coming down on a lot of corporations recently, not only in the financial sector, but also Alcoa. The SEC continue with their discussions. No settlements were reached, but it seems like, reading between the lines here, that Alcoa is suggesting that perhaps they have gone a long way to settle their problems with both the SEC and the Department of Justice.
And they are reaffirming, David, their forecast of 7% global aluminum demand. That is exactly what Klaus Kleinfeld, the CEO, told us just about a week ago. And we had that opportunity when we spoke to him exclusively on their 125th anniversary. What do you think of this debt ceiling battle? He was pretty much disgusted and said, from a business standpoint, raise the debt ceiling. You do not want to see this start to cause global gyrations. Of course, Alcoa, very much, David, a global business.
Indeed it is. Let's go back to our two traders here. Larry Shover, I want to go back to you for a second. And again, the question of whether or not the deficit was responsible for the problems that we saw at the last tick of the wire. It sounds like there's a lot of activity at the S&P right now. It closes in about 10 minutes. What's happening behind you? A lot of screaming going on.
Well, I think it's the same thing I mentioned earlier. I mean, half the crowd is looking for some type of resolution, rally, rebound. The other half are worried about a crisis sell-off. So that makes for a perfect market.
But let me just ask, what would cause, hold on a second, because we really haven't seen any kind of crisis sell-off going on. We've seen kind of a slow fading of the market.
Yeah.
What do they think would cause a crisis sell-off right now?
Well, I think the bias is tilting a little bit. I mean, we've fallen below the 100-day moving average. I don't care about technicals that much. However, it creates a lot of momentum in the market. Sooner or later, we start to leak. We list a port, and panic will ensue. And what's going to end up doing is just hasten the rotation into other asset classes that look at a value compared to the United States. That would be Europe. That would be China. That would be Japan right now. So whether it makes sense or not, people are worried, and so there's been a lot of mixed reactions behind me, and especially in the last 10 minutes.
Well, see, then the worry discussion comes back to Jim, who's out there trying to pick and choose some stock names. How should people be watching and deciding what to pick, Jim, at this point?
Stay focused on the fundamentals, not on the fear. You know, Will James said the art of being wise is knowing what to overlook. If there's an elephant charging at you from the forest, that's going to be easy to sidestep, but look for the tiger behind it. The reality is that it's unlikely that the default debate's going to take this market down. It will likely be something that we haven't factored in. But I like fundamentals, especially in a consumer-driven economy where I see the U.S. consumer remaining strong.
Okay, I love how all of your analogies have to do with animals. That's really why we have you here, Jim. You're an animal lover. We love you. Thank you very much for coming in. Jim Lowell, appreciate it. Larry Shover, we're going to check in with you in just a couple of minutes as the S&P futures close. You love those animal analogies. To the CME and Larry Shover. Larry, I hear a lot of shouting, even though the market just closed there.
Yeah, as the present morass continues to persist, the dips have been shallow and brief. But the longer we march down this path without a deal, you know the ground's going to become unstable. It's become very volatile. What's the impact? GDP's an impact, delay of tapering, and lastly, we're going to see a rotation, or could see a rotation, into other areas of the world and out of the U.S. for no other reason that we just cannot get our act together. So it's going to be fun to watch as a trader, very nerve-wracking for the investors at home.
All right. Of course, you know, there are a lot of traders that are cash heavy right now, just looking like dips like that. So, you know, at a split second, these guys can come back in and buy up some bargains, or perceived bargains anyway. Larry, thank you very much. Larry Shover in the pits of the CME.